Joining us now is Susquehanna's co-head of derivative strategy, Chris Murphy. Chris, how would you say this positioning compares to prior quarters for NVIDIA?
Well, it's one of the most actively traded earnings you're ever going to see. So there's a little bit of everything. If we were to pull out one trend, it would be selling puts on the downside. The downside's a little bit offered. So what that's telling you, as you can obviously look at the chart on the screen, some people have missed the NVIDIA rally. They are willing to buy on a dip. And one way to represent that is to sell puts on the downside. So like I said, you see a little bit of everything in something that trades as much as NVIDIA, but that would be one trend that I could pull out leading into this earnings.
How do investors typically utilize options here? Is this something where they hold exposure to the shares themselves and then use options to hedge? Or is it fair to kind of read this as a directional bet per se, or is it more of a kind of piece of an overall portfolio construction looking at NVIDIA?
Piece of the overall construction, I would say that it's a great situation for options liquidity when you have something that trades as actively as NVIDIA. You have call buyers on the upside looking for continued momentum. You have those who are long looking to take advantage of that 9% move by overwriting. They're offsetting to a degree. You do have some hedging, a little bit overwhelmed on the downside, a little bit overwhelmed by those who are selling downside puts that are willing to buy dip. So, because NVIDIA is so actively traded, you can use the options market not just to pull out that 9% implied move, but you can also pull out the probability of, let's say an up 20% move versus a down 20% move. And kind of what you mentioned is the options market is pricing in higher chance of an up 20% move than a down 20% move, mostly in response to the trading flow that I mentioned.
Here we have the current market update for NVIDIA Corporation, stock ticker NVDA. Before we begin with the chart analysis, if you find these educational materials to be helpful in your trading, please remember to click the like and subscribe buttons as well as commenting below so that other traders will be able to find this information more easily on the platform. So with this video, what we're going to do is look a bit at the options positioning that's currently occurring in advance of the very important earnings report that will be released tomorrow after the bell. NVIDIA Corporation will be releasing its Q2 earnings report this Wednesday after the market closes. So as we can see here, there is there's a strong amount of current market positioning that's going on at the moment, and a lot of this is being done with options. So based on this information, what we can see currently is that the market is pricing in more of a chance for a 20% gain in share prices rather than a 20% decline. Those numbers are a bit mixed, however. There is, it's an 8% expectation versus an 11% expectation. So there is a bit of division there in the market. So we don't want it to seem as though most of the market is expecting a major upside surprise here. Personally, with what I've been seeing, I do currently expect that the more likely outcome is for NVIDIA to beat on the earnings and revenue figure. However, that's not the entire ball game here. There's going to be a lot to look at in this report, and the guidance is going to likely be the most important aspect of this report. And then within the guidance, there are many individual pieces that are going to need to be looked at. So actively positioning before the earnings report is a bit of a risky game here. And in response to that, some traders are using options to sort of protect themselves against potential, outsized price movements in either direction. One factor that I do want to note here is the fact that I'm still erring on the side. I'm not trying to say that NVIDIA will miss earnings. I do think that they are going to beat on several important metrics. However, the risk for a downside price movement is still quite substantial. And if we're looking at the price chart itself, we can see that that share prices currently are topping out right at a very important Fibonacci level that can be seen on the 4-hour price chart. So specifically, if we're drawing the line from the major trend movement from 140.76 to the near-term lows coming in at 90.69, the 78.6% Fibonacci retracement comes in right at this top that is currently forming in share prices. So essentially, I can just move this right here, and we can see, the distance here we are seeing a little bit of a break here above, but these are spike price movements. We definitely haven't seen any longer term closing periods finish above this 78.6% Fibonacci retracement zone. So essentially, what we're dealing with here is a major earnings report heading into a very strong level of price resistance. So, in my view, the path of least resistance at this point will be a move to the downside. So that's largely in opposition with what most of the market is thinking at the moment. But we do need to remember that the division here is somewhat equal. We wouldn't really say that there's a massive expectation here that share prices are going to be moving higher after this report. And remember, this is what we're dealing with here when we're looking at these options expectations. What we're dealing with here is the expectation for share price, not the expectation for a specific earnings metric beat or something like that. What we're looking at here is the market reaction to the earnings report, and that can be a very different situation. There are many situations where a company will actually report positive earnings and then the share price falls, for example. So there's a lot of work here, and what we're looking at when we're dealing with these options positioning trades really is the expectation for the market response to the earnings report, not to the earnings figures themselves necessarily. So what I'm saying here is that there could be some differences here, and that the way this chart currently looks to me, we're really heading into a very important resistance zone, just as a very critical, earnings release is coming out. So the potential for fireworks here is real, and if the majority of the market is wrong in this case, and we do start to see share prices move lower, what that really will suggest at that point is more of an outsized price movement to the downside. You can think of it a little bit like standing on a boat. If more people are standing on one side of the boat and then the boat tips over, the people on that side of the boat are going to be the first to fall into the water. I do think that that's a fair analogy here. So, as things currently stand, my view on this is that there is more potential for downside risk and some sort of a miss somewhere in the earnings report that will lead the market to generate a negative response to the earnings. That doesn't necessarily mean that it will happen. It could just as easily go in the other direction. And as we can see here, the market is somewhat divided when we're looking at the current options positioning for this stock.
The stock is up, Chris, 40% since the August the 5th low. Obviously, that's a striking move for most normal stocks. Is it that striking for NVIDIA? And when it's come off the back of such a quick surge, does it change how you look at things and change the action that we're seeing?
Yeah, when we're able to have an opportunity where we think we can recommend, volatility at a fair level in a name like NVIDIA that moves around a ton, once again, you can point to, yeah, sure, it's a 9% implied move. But if you look back at the last couple of earnings, you have a up 24% move a little more than a year ago. So, if we see sharp moves like these and, the general trend since the August low was selling volatility in aggregate across everything. So, when we think volatility is coming back more towards a fair level, we're biased to recommend going long, especially when you get, the 24% move one out of every couple earnings.
That's a good point. And with NVIDIA, 6% of the S&P 500, even if you miss the rally or you don't have exposure to NVIDIA, this impacts the market in a very big way. Thank you, Chris. Appreciate your perspective.
Our High Value Trading Strategies membership is currently available for a limited time for only $9.99 per month. These high conviction investment strategies are characterized by superior risk to reward metrics that target massive market-beating returns over time. Join now to outperform the market. Lock in this special introductory rate of just $9.99 per month for the entire lifetime of your membership and start trading stocks with the pros.